Hi everyone. Welcome again to the Spirits Business Hub and our third of 5 talks that we have today. I hope everyone is having a great show so far. My name is Melita Kiely and I'm Editor-in-Chief of the Spirits Business magazine. We are very excited to be back here for a second year with the Spirits Business Hub at Provine, and we've had some great discussions so far, and I'm sure we're going to have a lot to talk about in the next 45 minutes or so. First of all, let me introduce you to our speakers. We have Matt Ashton-Melia, who is Managing Director of Charter Brands. To my far right at the end of the panel, we have Johan Kersten, who is Managing Director of Bemakers Benelux. And between them, we have Helena Zakmane, who is Global Marketing Executive at Global Ireland Rum Brands. Thank you all so much for joining us here. We're going to be talking spirits retail and distribution, navigating political and economic change. A very light subject for a Monday afternoon. My first question to you, speakers, is what is the biggest shift or development that you've seen across retail and distribution in the last few years?
I think for me, a shift in terms of rationalising portfolios, whether that be in retail or with distributors, people looking to represent less brands and drive more volume and just be more efficient across their business. So I think that's something that I've definitely picked up on in the last few years, a big shift quite aggressively in that respect. And then just also quite a big hollowing out of the premium segment of the spirits industry, which is strange really, because that's kind of where a lot of the growth came from probably the last 10 to 15 years. I think we see ultra premium brands doing especially well, brands like Class Athol, where there's a lot of prestige and status that comes with purchasing brands like that. But a lot of people that were kind of trading in that 40, 50, 60 euro category, they're kind of coming down to a sub 30 RSP as a consumer at least, and that's then dictating the brands that distributors and retailers are consequently stocking.
And why do you think you're seeing those pricing shifts at the moment?
I just think because of all the pricing pressures and inflation that we've seen through the last 5 years. I think obviously we had the pandemic, which was a challenge for a lot of governments. They're increasing their taxes, trying to address the deficits that's created. And then on the back of that, you've got consumers who are feeling it in the pocket and are looking ultimately to try and still buy quality, but at a more affordable price point than what they were doing previously. And then I think distributors are having to react to that, as are retailers. And if you can kind of represent 10 to 15 brands and drive all the volume that you want through those brands, rather than having lots of different niches within your portfolio, is a more efficient and profitable way to run your business. So it goes right the way through the chain.
And Helena, how about you? What are some of the biggest developments and changes that you've seen?
Right. Well, first of all, it's been such a roller coaster, right, in the past few years. I mean, it's actually hard to say even what is the change that is there to stay or is just a phase. If we look at different channels, we've seen obviously with the pandemic almost the sudden death of the on-trade. At the same time, the off-trade went extremely up, and now it's going the other way around. What happened with the global travel retail? I mean, from a complete stop to a huge revival, and now again we have for the past 2 weeks, obviously a huge disruption in the GTR business. At the same time, I wanted to build also on what Matt said and talk about the more overarching change that I also noticed is that efficiency that is now is extremely important for the distributors, mostly in the markets. That's what I'm seeing from my perspective as a brand owner, working with almost 50 markets across the world. It kind of took away a bit of that personal touch to the brand development. I don't know if you've noticed the same thing, because just to give you an example, if you talk with a distributor in a large market like even Germany where we are today, and you ask them, would you like to have a brand developer from the brand owner, like representing brand owner on your market, developing the brand in the on trade or in specialty off trade? They tend to say no, and they tend to say no because this kind of approach basically creates issues for them. Logistical issues, efficiency issues, delivery issues. So if he opens a nice bar, how do they deliver one bottle or even one case, right? So that, I think it's a big shift, like on top of everything else, on top of all the uncertainties going on.
Yeah, I see a much more polarized world. So we all live in a global economy, and the last 5 years have been pretty challenging with a lot of changes in the market. So you see that the big multinationals are dealing with that in their way, but by doing that, they are making smaller independent brands' lives more difficult because they flex their muscles and overstock distributors, and so the gatekeepers are getting more powerful, or so to speak, which is not really beneficial for anybody. Because when you go to the entree to a bar, you see a more homogenized display of offerings, which is not good, I think. So I think that's one part. The other part is that the market becomes more fragmented. So you have in the on-trade, for instance, you used to have bar owners that would have one owner, one bar, and now they go into more groups. So the type of deal is different. But then you also have new ways of going out. So 20 years ago, I would go into a bar Thursday night and crawl out on Sunday night. But the young people, they don't do that. But they do different things. They go play games like urban golf or something. So these new venues, they might have a new route to their markets. And then the traditional distributors don't really have access to those customers. But that is where the volume is. So there is a disconnect between the end customer and the supply chain, I think. So that's also, and it's changing fast. So that's one part, but what I say on-trade, but then liquor shops are new ways, supermarkets are new role, digital as a new role. So yeah, there is a lot of challenges that are changing, and it's difficult for small enterprises that maybe you have a brand owner and 3 people in the team to navigate that. If you set yourself against the Diageo, so there is difficulties. Yeah.
There's clearly a lot for the industry to contend with at the moment from what the three of you have said. So, Johan, leading on from what you were just saying, how have you had to adapt to some of the changes that you've seen in the market?
Yeah, so from my perspective, I had 2 companies. One as a brokering service for brands entering Europe, where I would find distributors. I found that increasingly more difficult the last couple of years because importers were more closed and more unwilling to take a chance on new brands. So then I started my own distribution company in my market, the Netherlands, facing the same problems as any other distributor. So last month I moved to Bemakers, which is a completely new model of getting products to the market. And this is also where I believe the future is. So basically what we are doing is we are giving back control and power to the brand owner, also placing risk where risk should be. So the stock risk is not at the importer, it's still at the producer. But we provide a route to market, and we are looking for those new niches, and we do have access because we don't care about who is the wholesaler because we deliver direct. So we're bypassing the issues. Doesn't mean we don't want to work with them, but if we have a customer that says we want to buy your product, but my supplier can't supply it, okay, we find a new way, and then we deliver. So we work around. Yeah.
Do you think that there is much awareness in the industry that there are alternative routes to market and distribution models rather than the kind of more traditional ones that we know about and talk about?
Yeah, of course. Every country has their own regulations on excise duties, imports. So yeah, there's a lot of hurdles logistically. I think what they all have in common, whether you're in the brokering business, what Matt does or what I do, it comes down to personal relationships, right? In the end, it's the bartender or the sommelier or the purchaser or liquor shop owner that makes the decision do I stock the product or not? So I think whatever you do in terms of compliance and logistics, you need to have that customer contact. So I would propagate that brand owners, small or big, take ownership by taking that consumer or customer and then guiding them all the way through by the box, rather than relying on some wholesaler somewhere to sell the products. Because, yeah, that model works, but where the wholesalers or distributors sell, that market has changed. So if they don't adapt, then, yeah, it doesn't mean that the route should stop, right?
Matt, I'd be interested
Yeah.
to hear how you are finding how you're having to adapt to some of the challenges that were outlined.
Yeah, I think, like I said before, it goes right the way through the chain, which is a shame sometimes, because then the actions that we take aren't necessarily the actions that I would like us to take as a business. I want to give small brands a chance. I want to work in more niche categories and try and establish those internationally. But I guess the reality is a lot of the time we do have to also consolidate our portfolio a little bit. We have to look at brands that we know that we can scale. So if that brand can't deliver 2,000 cases per annum in Portugal or Greece and then build from there has to be that question about should that brand then sit in the portfolio. There's always obviously opportunities for, when I look at brands coming into the portfolio, you're looking at those brands that open doors and those that can drive volume, and they're not always the same thing. So you might get in with a mezcal, but then you might be able to sell your house pouring tequila on the back of that, and that's where you get your volume from and your blended margin. So we have to be careful in terms of the brands that we commit to, because I think it's getting more difficult to build brands successfully. And then I think beyond that, the next thing is with the brands we do work with, we try and create a hook for the distributor. So one of the brands we work with is called Virginia Distillery, most award-winning American single malt whiskey in the world. Fantastic brand, but obviously by nature quite premium. So we're now working with them to develop a more affordable entry-level SKU. The profitability on that SKU for the brand owner probably isn't what they want it to be, but from a distributor's standpoint, they'll commit to that brand because they can then see that brand driving thousands of cases per annum, not hundreds of cases per annum. And the beauty for the brand owner is once you've got that distribution, there is still the opportunity to upsell the rest of the range where you are making your desirable margin, and ultimately you are still achieving your original objective in a roundabout way. So that's how we're, I suppose, pivoting to make sure that we can succeed in this environment.
And Helena, same question to you, because I think you might have a different take.
Absolutely, but from the brand owner perspective here, so I find it that for us, the flexibility is key. Absolute flexibility in our relationships with the distributors, and also at looking at different models. And I actually wanted to a bit discuss with Johan on this, because we see like a lot, and I know Bemakers, for a while already, and we've had those discussions before. But I think it's kind of important to for us also to understand if there is a way to combine in some way, right, the traditional distribution system that some of the brands like us already have, and what you are talking about, because this is that flexibility that I'm talking about, and if there is a chance to do it, to use it, then I'm super interested to hear how you advise.
I would say from our perspective, our goal as a company is to let makers be makers, hence the name Bemakers, right? So it doesn't matter for us how the bottle flows to the customer. So let's say you have a distributor that doesn't touch Amazon in Germany. Fine. If they don't want to do it, why should the brand say, oh, I'm not going to touch Amazon in Germany? So if we can do that for them, and we have the supply to Amazon, and we have the knowledge on how to do that, then we do it. So we would not be opposed to any of those. What we do see is that where you have brands that have exclusivity deals with distributors in place, right? So they have an exclusivity for that market. But sometimes you have a distributor that is really powerful in the off-trade or in the on-trade, but they don't touch the other market channels. So I think that's a bit outdated at this time because of the changes, because there is economic pressure for everybody to deplete bottles. I think the brand owner should also be open to say, well, we do have exclusivity, but if you don't touch that glass of water, then I can touch it, right? Because it's not harming their business. But some of the distributors are a bit more, I'd say, protective of their, or afraid, or say,
Is there a positive argument to be made, like not just because you don't touch it, we're going to do it, but is there anything for them you see,
no, of course.
that I could, as a brand owner, basically present to my
Yeah,
distributor?
no, 100%. So if let's say you're a distributor that touches the off-trade, so you only go to the consumer. But brands notoriously are built in the on-trade.
Yeah.
So if you can build in the on-trade, you will have more off-trade sales as well.
Yeah.
So it all works together. If you advertise on Instagram, you reach more consumers. Bartenders are more likely to take it. So it goes both ways. If you activate one channel, you're helping the other channel. But if the distributor or the importer or the wholesaler is not willing to play in one channel because that's not what they're used to or that's not what their power is, that's fine. So it shouldn't be one is either this one or that one. I think for the brands, they should have a 360 approach where you're able to touch everybody. That will be the perfect world.
Yeah, still a challenge though.
Oh, of course, yeah.
Yeah. And I mean, if we talk a bit more about the traditional distribution model, like what kind of pressures do you see on that at the moment?
I mean, margins are tight right across the board. So I think obviously the pandemic, the cost of living crisis that followed, I think brand owners, distributors, I think everybody's cut the margin down to the minimum of what it needs to be to succeed. So I think that for me is a huge challenge. And then from there, it's kind of trying to get that engagement at distributor level, which is why I think Bemakers exists. And I think one of the brand owners that we work with, the Duppy Share, they've kind of working with you guys in Denmark and trying that out. I'm kind of similar to yourself, wanting to ask questions and to learn more about it, because in concept, I love the idea of what you're doing. I love that Bemakers are challenging the norms of how distribution is done. I think my only concern is how much it asks of the brand owner sometimes. So a lot of the time, a brand owner will really focus on their home market and establishing the brand there, and that story then travels far and wide. And then we try and kind of use that when we're building a brand in export. The problem is a lot of these brand owners are quite small in size when it comes to headcount, or even some have got cash, some haven't. It depends on the brand. And then how do you try and replicate that presence and that activating that you do in your home market in 15, 20 other markets? Because you're almost being forced to be more involved. What I'm seeing a lot at the minute is the American market is always a market that's frightened the life out of me, because a lot of the time I see it stay at distributor level. They'll collect the orders, but it's actually the job of the brand owner to be out in market selling the cases into the venues, and they in effect take and service the orders. I'm starting to see that happen more and more across more markets, and I don't quite know, hopefully it is something like Bemakers, I don't quite know what the answer is to that, because we can't play that role as brand owners in every single market. The only guys that can are the big brand houses that we're all collectively working against, all said and done, to try and win some of their market share. So
100%.
that's the challenge.
Yeah. No, just building on what Matt was saying about the price pressure. I think that is the biggest challenge at the moment, because the big guys are panicking. Let's call it as it is, right? And the challenger brands or up and coming brands are really sort of caught in the middle together with the independent distributors in all of those markets. And it's really not sustainable. I would say we can live through this for a couple of years, but maybe in the best case scenario. But it's in the let's say in the moment of shrinking purchasing power from the consumers. This is absolutely counterproductive as well, because what's happening? They think that by dropping the price, they sell more. Actually, they sell the same but cheaper.
Yeah.
And obviously, for smaller players like we are, it's a huge challenge. And at the same time, we do have to support our distributors in the markets. We have to be even closer to them. We have to try and balance that marginality level with at least some top line growth or top line protection, I should say, in many cases. So that is the biggest challenge for the whole system at the moment.
What can brands do then, or maybe distributors, retailers? Like, how can the industry work together maybe more collaboratively if, there are these pricing pressures? Like you said, you can't just drop your price because nobody wins in that situation. Like, what advice do you have to help brands kind of navigate the tough situation we're in at the moment?
I think we've just got to make it easier for distributors wherever we can. We haven't got the margins. A lot of the brand owners haven't got the deep pockets. A few do, and that's nice for them. But I think ultimately, more flexible payment terms, I think, are really helpful. I don't think there's always an appreciation. And it's not easy, can I just say, for a brand owner at all to start granting extended credit terms. By the same time, credit insurers are tightening their belts in terms of what they'll lend against. So there's all those challenges. But if you can offer more flexible payment terms, then the distributor might be able to commit to larger volumes when they do order. That brings the freight impact down per unit, and consequently that creates more margin or a more competitive RSP in market to then drive more volume. I think at Charter Brands, all the brands, well, I say all the brands, the 12 brands that we represent, give or take, we consolidate all of those brands at Amsterdam Warehouse Company. The main benefit for that is that if we're working with a distributor and they take a mezcal, but they say, Matt, I'm now looking for a new rum, or I'm looking for a tequila, they can then work with us on a second, a third, a fourth brand and collect them all from the same location. So less points of contact, less distilleries to collect from. So you're just trying to make their life as easy as you can. So you can't necessarily throw cash at it, but you can create savings in other ways like that.
I'd say a couple of things. One thing, and that's what I'm trying to implement, lay off pressure as a brand from distributors. Try to kind of give them a breathing space. We all love plans, and I'm the first one who loves doing them and following them. But now it's not the time. It's not the moment. We really need to lay off a little and at the same time be flexible enough to use all the opportunities, or relevant opportunities at least, that the distributors might bring us. They talk about an in and out in a retail chain. Like, try to support them in that, and really the flexibility is key. And in general, again, going back to the point of balancing the marginality and the top line, try, if you can, just focus on one or two markets where you do have a momentum at the moment, and there try to grow your top line. And all the rest, what I'm also trying to do is protect the marginality as much as you can.
Yeah, I think on that topic, what you said about the decreasing margins for everybody. So if you have brands that come from far, from Australia or Asia, for instance, so they come into Europe, and then they got warehousing costs, a country distributor, a wholesaler in a country, maybe a sales agent in Italy. So you have 4 or 5 layers of margin. That's one. But also you have 4 or 5 layers of data that you're not having. Because if you're based in Asia with a brand, you have no idea what's happening on the ground level, right? So I think if you want to work on a better margin, the brand owner and the local distributor or an entry point like Matt should have a tighter collaboration and maybe share the margin, maybe exchange some equity in return. Say, well, the money's not there, but we can do some sweat equity, for instance, at least, to keep everybody happy. But then if you're more outsmart and go into the markets and understand how you can maybe work around 1 or 2 tiers that you don't really need, but they're just there for comfort, that would save. So that's for sure a thing. And the other point is that brand owners themselves, they can take more ownership in getting to the customer, right? So what you said, having brand developers in a country, you can go to a country like UK where they will charge you retainers for having physical representation. If you do that there for 20 countries in Europe, you're going to go bankrupt. But if you have your own guy, it still costs you money, but you can spread that over more countries, right?
Yeah.
So you can be more efficient, like we said, with your warehousing, local bottling, all that stuff.
Yeah.
But brand owners, they tend to have two mechanisms inside them to say, well, we outsource it, so it's their problem now. That's one. They need to change that. And the other part is that they want to control, let's say, production, but maybe bottle it here, produce a liquid there, bottle it here, might be cheaper. But I found quite a bit of unwillingness to do that because they say, we don't know if the quality is good. Of course it's good. Yeah. So there was a lot of things to win there for sure. Yeah.
And, with things like the situation in the Middle East, for example, we're seeing the war in Iran, and that's creating a lot of stability in that market at the moment, adding to, the economic pressures that we are already feeling worldwide. How can brands and distributors and retailers navigate that situation, if it continues for longer than we all, hopefully it will be a short-term thing, but if it's not and it's a longer-term issue, how can we navigate that situation? And how closely should brands be looking at it and moving to adapt their strategies?
I think a brand should go to the Gulf region today, because in Saudi Arabia they're working on Vision 2030, where they're investing, I don't know, maybe $1 trillion into getting a whole economy around tourism there. It's a completely new market. So we can keep fighting here for the same consumer. But there is a whole new market being developed there. So that's one. Africa, super interesting market. Go there. Japan, Korea, interesting markets. Go there. So expand the horizon. Don't only stay in the safe zone where you feel comfortable. I don't want to go on a holiday in Tehran tomorrow, but that area is super interesting for sure. So that's one. And the other, everybody is having that same problem, right? Everybody has that same increase of price, the big guys, small guys. So if you can't control it, don't worry too much about it. You can worry all you want, but you're in the same boat as everybody else. So I wouldn't care at all. Yeah.
I think also we need to get out of this slump we've got in terms of the negativity that we sometimes see in our industry. I think the reality is that it's difficult, but I graduated from university in 2011, and I don't think there's ever been a easy year yet, to be honest with you. So if we kind of move away from expecting those good times to come back, and we focus more on succeeding and navigating through the times that we face, it's frustrating, whether it be kind of economic or political decisions that are happening that are constantly setting us back and changing the world that we live in. It's not easy. I think the way that brands can navigate that is to be market-led in how you're approaching things. I think I see so many times brand owners that start from the ground up. They'll have an idea in their head, they'll create a product, they'll have an expectation of what margin they want to make, and they will not shy away from that. And I think that's a very idealistic way of thinking in today's market. I think ultimately you need to look at the market, the conditions, and where you need to be to succeed. The consumer's not stupid. They'll pay what a product's worth. They won't overpay just because you want to hit a 50% margin. And what I would say to brand owners is don't turn away good business. It might not be desirable, might not be the 50% margin that you want, but if it's 30% margin and it's 3,000 cases, you take it and you build on it. And I think that's really important that we do that. And also just be reassured by the fact that good businesses and good brands will succeed and they will stand the test of time. And I think we just got to remember that sometimes rather than getting too, down in the dumps about how challenging things are day to day.
I think that's a really good point to make because, like you said, quality and just knowing your brand and it being so certain in what you're making and what you're producing and who your audience is can really stand the test of time, like you said. And I was speaking to someone recently who referenced a study that shows, when times are tough, those who are innovative and still thinking creatively are the ones who actually succeed well beyond whatever kind of economic or political hurdle is currently in place and find that longevity as a business.
Yeah.
Helena, what's your take on that?
Well, talking about the situation is a bit hard for me to generalize at the moment because, for those of you who don't know, Rum Brands is a brand owner of Cuban rums. and we have a joint venture with the Cuban government. So I'm quite inside that situation right now, and yeah, navigating it is obviously a huge challenge. There's enormous uncertainty. And we have obviously responsibilities as a producer there towards the people that work for us there. So we are doing all we can to secure their jobs, to continue producing, to continue exporting from Cuba. At the same time, we also have the responsibility towards our customers and our distributors all across the globe, and making sure that we've exported enough liquid to make sure that we have production capacities for the next years to come, actually, because we don't know what's going to happen. So at the same time, building all kinds of scenarios where, potentially the U.S. market opens for Cuban rum. So of course that would change the game entirely. But once again, we have a very big team in Cuba. We have our own distribution in Cuba as well. And Black Tears, our flagship brand, is the second biggest brand in the home market in Cuba after Havana Club, which surpassed Santiago de Cuba last year. And I mean, that's the first responsibility, let's say, and our worries are go out to the Cuban people, and whatever happens, we really hope that it's going to be better for them first and foremost. So that's just the situation that we are living in. At the same time, fully agree with Johan. I mean, yeah, don't worry. I mean, when you're inside the plane, I mean, you can't fly it, right? So don't worry about what you cannot control. Just do what you can do, that you're good at. Be confident about your brand. Certainly remember your origins, and remember that still we're in a business where liquid matters. Always remember your quality of the product in whatever cool packaging you want to go into, or a cool project, or a funky way to consume. Just really stay true to the product itself. I think it's still it will never get old. It's still absolutely inherent for our industry. And I second very much Africa. Yep. Really pay attention to Africa. Yeah, we're just starting to understand, and there are some people that know something. I mean, talk to them. Really, it's a fascinating continent, and with incredible opportunities for us.
Interesting that you both have mentioned Africa. What is it specifically that is exciting you about the continent?
What enormous young population that are just now coming of legal drinking age. Huge interest towards quality imported brands. The lifestyle that has evolved enormously in the past several years towards being way more sort of international, global openness to the lifestyle and brands, and all the
some of the biggest cities in the world are in Africa.
Exactly.
So it's kind of easy to go there, and one city is one country here. So get your stuff there, and then maybe not everybody is as wealthy as the people in France are, but there is still enough to go there.
I think also as well, like a big emerging middle class that's never been there before. So there's a lot of people now that have got money that didn't have money before, and to be honest with you, they're quite keen to show that off to their peers, the people around them. I mean, I flew back from South Africa yesterday to be obviously here at Pro Wine. I spend half my year there as well, so I know quite a lot about what's happening in that continent. We're just putting El Tequileno into Nigeria and Tierra Nobles, 2 of our premium tequila brands, and then 3 or 4 brands hopefully are going to follow that. But yeah, they're enthusiastic, they're excited, they're very optimistic about the prospects of the market as well. Similar in markets like India as well. These a lot of the time, especially in Europe, we are very much focused on the challenges and how difficult it is. And these are very mature markets. You touched upon the UK. A lot of distributors are charging fees just
Yeah.
to be represented with no expectations, no promises, no reporting sometimes.
Yeah.
We can't have that model start to win in more markets because brand owners can't sustain that. And we just see in markets like Africa, like I said, for me, Eastern Europe's quite interesting as well. Even in spite of the challenges and everything we're seeing over that way, markets like, your Azerbaijans, your Moldovas, Ukraine has been a very good market for us through the last few years, which we would never have expected. But in those markets, when we start looking outside the more mature markets of the US, the UK, Germany and France, which are the markets that every brand owner wants to win in, a lot of the distributors in those other markets, they're really willing to work very hard to establish their brands and go above and beyond. And I think that's the beauty of export, that you can build an export strategy, but where you get your wins from will be probably where you least expect.
Yeah.
And you've got to really capitalize on that and build on that.
Yeah. Yeah, so don't be afraid to explore also new cultures. So I think some brand owners, they've got a bit of cold feet when they think, oh, India or Africa, dangerous, I don't know, or Rio de Janeiro, which is, I found that market super, super cool. But once you go there, you see it's not so scary at all. And the people are super nice, and there is actually a system and logistics, and so you can make it work. But overcoming that culture gap is difficult mentally for a lot of people, personally as well, because you have to empathize with other people's customs and how they do stuff. So then if you go to Europe, it's kind of safe, or you go to US, it's 50 states, but they're all American. But if you go to Europe, the difference between Italians and Finnish is enormous. If you go to Asia, Koreans and Japanese are completely different. But I think that's also the interesting part of it. So one of the perks of being a brand owner is that you get to see the world, right? So I would encourage everybody to do that and learn, be open, and then you will see all the opportunities right in front of your face. And don't be scared to do it then. That's, yeah.
I really like that you've highlighted so many areas of opportunity that you're still seeing, because I do think it's really important to, as much as we need to talk about the challenges and the issues of the industry, to really reiterate that there is still opportunity for growth. There is still opportunity to make your brands profitable and your companies profitable, despite all the kind of negativity that we are unfortunately also seeing. I do want to talk to you about the US as a market. Like you say, it is such a dream market for so many brands, and such a lucrative market as well. We know the success that can be found there. Do you think newer brands or emerging brands can still enter and succeed in the US, with the tariffs development that we have that's ongoing? Or would you really recommend, looking to the alternative markets that you've suggested?
I think, like I touched upon, Ukraine's been such a good market for us in recent years. I would never, ever have anticipated that. We've got a fantastic distributor there. Like I said, America for me does terrify me a little bit, just because I think you can build a really strong business and a profitable business in 50, 60 markets, and then the capital resource that's required to then succeed in America, you can spend all of that just on that market and fail miserably if you're not careful. So I think for me, America's interesting. I don't worry so much about the tariffs, being truthful. I think you touched upon it. If it's applying to everybody in the market, then you kind of don't really feel the negative aspects of that. Secondly, we aren't trying to get too political. I don't think anyone puts much emphasis on Donald Trump's words anymore, because they can change from day to day. So I think that is, in some respects, a good thing. But I think the only thing is, you've just not got to be led by vanity when it comes to the US market. That's my personal view. It's very easy to go into that market and in 12 months say that you're in 32 states, but actually you're in a world of trouble a lot of the time that you do that. Kind of appreciate the fact that every state is a different country in effect, and pick your states carefully, and then I would say invest resource, people on the ground, time, money to really crack that market and take a long-term approach to success. Like I said, it doesn't come without its risks. And I think there is a question mark for a lot of brand owners about whether it's even worth going down that path if you are succeeding and you've got a profitable business in 40, 50 other rest of world markets. But I think you can succeed. But I think sometimes as well, I see a lot with UK brand owners especially, they kind of see how difficult the UK is right now, which it is. And they think, well, export must be easier, so let's do export. But you've got to kind of be ready to succeed in export and again take that long-term approach. You might not make the profit that you want to do initially, but if you take a 3 to 5 year approach, you can be in a really strong position come the end of that. So just make sure you're going into it with your eyes wide open and being pragmatic about the realities of building that brand outside your home market.
Yeah, so I think on the US, the tariffs don't really matter anyway. It's 10%. So normally the value chain in the US, if you have a $50 bottle retail, the brand owner, the producer there, they get like half of the money goes into the pocket, right? So the cost of the route to market is double. I think in Europe it's triple. So if a bottle here is 50 euros retail, the brand owner gets like 17 euros, 16 euros. So here the route to market is more expensive in Europe compared to the US. What makes the US more expensive, so to say, or needs more investment, is you need to pay out all those kickbacks to sales agents on the street, right? So that 3-tier system needs channel management and lubrication in the form of money. So that's what makes it more, but it's always been like that. So whether you have an extra 10%, doesn't really matter. So if you go to the US, you still need to bring, I don't know, $1 million at least. That's not a crazy number to get started. So I work with a brand that's starting with 10 million to get started. Otherwise, they say it's no use. So regardless of the 10%, that's not the thing. So I would, as a brand owner, if you don't really need to go to the US because of your investors that want to tick a box or whatever, then I would definitely try other markets that are less populated. You know, why not go to Uruguay or somewhere in Latin America where there's a lot less competition? If you can make volume there, it all adds up to your brickwork, your fundamentals of your P&L at the end, right? Because most likely you have quicker success. It's more fun to celebrate success than to overcome another asshole distributor that wants 5,000 money. No. So that's how I would see it. Yeah.
And in terms of brands absorbing cost pressures and cost increases, what advice do you have on navigating that? Is it just something that we are going to have to see more of, brands absorbing extra costs that they're facing?
I think what I see now is brands are reworking packaging. So, the cost of bottling is high, obviously. So you see more and more bag-in-box, like 5-liter offerings or plastic pouches. So that's good for the environment. And it's a more cost-efficient way of packaging products. And I see in the on-trade that people are open to it as well. So bartenders say, oh, it's easy. I don't need to work with all the glass and it's just cardboard box I can throw away. So that's a way to cut costs. I would say never apologize for your price. So if that's the price, that's the price. Let the discounting do to the retailers or the big guys. Let them fight it out and let them eat that pain. But as a brand owner, you shouldn't subsidize on the price, I would say, because you need that margin. So I would say 2 prices: full price, or you give away a bottle for free, no discount.
Thank you for mentioning the bag-in-box.
Yes.
Thank you. We just launched one actually, exactly thinking the same and listening to the on-trade channel a lot, especially in the markets like the UK, France, and some in Asia actually, in Hong Kong in particular, in my case, and. What it also does, so of course, apart from lowering the price, lowering the cost of the drink for the on-trade venue, it also still allows the venue to offer to their guests the same quality of the spirit. They still can use your premium spirit, but at a 30% lower cost versus the bottle, which is an argument that also works a lot. And there was another trend that of course is emerging, the cocktails on tap.
Yeah.
And packaging like a bag and box or a pouch is actually very, very helpful for the bars that start offering that. So yes, it's I think it's an emerging trend,
Yeah.
very much. So I've got like several markets that started very successfully with the bag and box now in the past several months. We launched it back in October. So yeah, definitely think about that. Yeah, and what I said before about trying to balance your marginality with the top line growth. Again, focus on a couple of markets where you are willing to sacrifice a bit of that margin, but protect it in the most of the markets.
Yeah. I think it goes back to the customer will pay what a product's worth. And even if you want to pay an extra £5 a bottle, they're not going to do that if you can't justify that through the value proposition. So I think short term, I think brand owners should be really focused around being operationally efficient and smart, whether that be launching a bag and box, whether that be changing where you bottle and where you warehouse, so you're not moving stock around as much. There is margin grabs you can get by being more efficient from an operational standpoint. And then I think in terms of investment, invest in things that are practical, that you can generate an ROI on, that you can see tangibly how they're going to work. So for example, it might be the development of a 1 litre SKU format, or it might be a bag-in box, or it might be miniatures to encourage liquid on lips. All of those things cost money, but you can clearly see how you're going to win more distribution and ultimately generate an ROI from that. So I think put more money into those things and less money into probably, not saying less money, but build a value proposition up for the long term, but short term, be really operationally smart in how you're doing that and build more margin into your value chain that way.
Yeah, making sure everything that you spend has like real purpose
Absolutely.
behind it.
Yeah.
In terms of brands who are looking for new distribution, what would be your one piece of advice for them in 2026?
I would say that brand owners need a little bit of experience in their own brand so that they work up some success stories in their own markets. So then they know the first-hand feedback that they will get from the customers on trade, off trade, whatever. So if they then have that experience, then they can make a better proposal to distributors. So I think they should come with a business case, because the distributors these days, they are not willing so much to take a chance on a new product that has no track record in their market. So you have to do more than just say, hey, we're the best tequila at a good price in an amazing bottle. Buy a pallet. So that doesn't fly anymore. So they need to come say, hey, we're the best tequila and we have an amazing price, blah, blah. That's all normal. That's not a selling point anymore. But we do activation on this and we do this. So they need to come with a plan. And then for the distributor, it's less of a risk, because these distributors now, they are all facing the same pain, liquidity issues, pressure from the multinationals, more difficult to get deals in the on-trade because Bacardi makes a deal. So you need to take away that risk for the distributor and basically offer a comfortable, hey, if you work with me, I'll take care of you because we will make this a success. And this is how I'm going to make it a success. And in the past, most brand owners were more reliant on, this is my offering, how many pallets do you want? So I think that is the advice I would give.
Now, I think if you're thinking of launching new products, the ones that stand a better chance now, I believe, are the ones in the categories that are not so well defined. So liqueurs, for example, right? A non well defined category where you don't have necessarily super direct competition.
Yeah.
So, and there you have a chance to create something unique, and the distributors are more likely to take a chance on the product as well, because they are not scared of someone the other product coming from Diageo or Pernod Ricard or Bacardi or Broforman, and they see the unique opportunity. So yes. So for the existing ones, yeah, fully agree. You need to give the tools. Just give as many tools, marketing and commercial tools, to the distributor as you can. That's your responsibility as a brand owner, and to really tell them how we're going to win together. Clearly.
Yeah, exactly.
Yeah. I think like I said, if you're looking for new distribution, I think keep a positive mindset. It's hard out there, but let's not get too caught up on that. Be absolutely relentless as well. I mean, the amount of doors I've knocked on and been rejected on is countless over the last 10 years of doing this. But you do, when you start measuring things over the longer term, you start to see that success. So don't get too disheartened. Like I said, think about, listen to the distributors, listen to their challenges. Make sure that you've, as a brand owner, got the practical things in place. The amount of time I see brand owners kind of throwing cash around sometimes to distributors, and yet they don't even have a clear activation plan. So, you know, if you're going to activate in market, like El Tequileno, one of our brands, for example, has the Margarita Mile. I think it won the Spirits Business Activation of the Year last year. So how do we take that? That's obviously been a big success. And how do we package it in a way that's easy to communicate and can be replicated across every market? Because you've got, distributors haven't got, they're facing the same pressures that we're facing. So ultimately, they've got less time to build brands, and they still are these expectant brand owners. So have we got a 5CL format? Are we in 70CL? Are we in 1 litre? Have we got bag in box? What if we activate? How do we activate? Give them all that information so they've got the tools to do the job. And then regarding like reporting capabilities as well, just be mindful of how much time the distributor's got. You know, when you're Diageo, you can ask for a weekly catch up with every single distributor. You say jump, they'll say how high. You're not Diageo, and you've got to remember that. So even in our business, we tried to have quarterly catch ups with every single distributor, and we still got pushback. There's opportunity for that ad hoc meetings as and when they present themselves, but ultimately what we ask for is annual brand plan, quarterly depletions, and a meeting twice a year. And if there's a need for a meeting in between of that because of a pressing need, then we'll do that. So try and work with your distributor. And just touch upon what you said as well. It is still a relationship business. If a distributor likes you, they will put undue focus on your brand. And it's our job to make sure that you are their favourite brand in the portfolio.
Matt, Helena, and Johan, thank you so much for such candid and practical answers here. It's really, really valuable to hear your insights. We do have a little bit of time for some questions. If anybody would like to ask our speakers anything while you're here. Yes.
Thank you. Hi.
Hello.
Just quick question from your distributor perspective in Europe. Is there like an average timeline when you give a new brand a chance, when you know if it's getting enough traction in the market or if it's time to change strategy? What's like a timeline you follow on that?
I would highly advise 1 year because things go in cycles. So in 1 year, you've got the shows, Whiskey Live, whatever. On-trade works with their cocktail menus in cycles. So if you give them 3 months, then then they don't have the opportunity to wait out, to sit out the cocktail menu cycle for the next menu, right? So maybe you have to wait for 6 months to get on the menu. So that takes time. Same with shows, to get awareness to consumers. So that dripping down time to get actual in the market takes time. So I would say a year, and then what you can monitor earlier as a brand owner, for instance, is say, I want to see depletion reports and I want to see visit reports. So show me where you've been. Can you share data, what you've seen, where you went, and give me feedback? Because if they went to 20 bars and they all said no, you want to know why. Is the liquid wrong, price wrong, packaging wrong?
Yeah.
Or is it just pushed up by multinationals? At least you know. So don't sit in your office and wait for a year and then say, no, not sold. Okay, move to the next. But be involved and say, I wanna be part of your journey, and then most likely things will happen more fast because you stay top of mind of the distributor as well.
First 12 months is very much about seeding the brand, seeing what works, what doesn't work. You've got to give the distributor time to do that. And then obviously year 2, year 3, that's when you really capitalize on that because you've tested that already. I think what's really important is what you said, communication, regular communication from them. You know when a distributor's proactive, you know when they're optimistic. If you've got those two things with a distributor, give them time. If you're not hearing from them, if every story you hear is about how difficult the market is, especially my biggest bugbear is when you're selling to 80 different markets. We're in a global world now. We're all feeling the same pains. It's not unique to Germany or France or the UK. So I think if you've got a distributor that communicates, they've got a positive mentality, I think, give them that 12 months, let them see the brand, and be careful about making any changes if you're seeing that behavior from them. Yeah.
I think it's even a little longer, I would give, than 1 year, talking about the timeline, really, because I think, to me, it's 2 years minimum, especially for the brands that are willing to go after the off-trade, because the timelines of potential listings in the off-trade are extremely long. So you cannot expect miracles in year one. They might need to offer 2, 3, 4 times the distributor to the retailer, and it may be something. The negative outcome in the first couple of times might not be like anything in your control or in the control of a distributor. It's just the situation. You don't know who you're up against as a competition at that point, and so on. And again, building on what Matt was saying, I would say, like, take time to learn the market as well.
Yeah.
Just don't. We all tend to say, yeah, I respect you very much. You're my friend. You're a distributor. You know your market much better. Yes, they will always know it better, but the conversation is always more efficient and more productive if you actually know the names of the retailers, know how it works, what are the timelines exactly of their listing periods, what are the promotional activities that are allowed or not allowed in that particular market, and so on and so forth. We really need to keep a lot of information as brand owners in our minds about as many markets as possible. Actually, that's my advice.
Yeah. Thank you all for attending, and thank you so much for all of your insights this afternoon.
Thank you, everyone.
Thank you.
Hey, guys.